questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Friday. Welcome back to A1 Trading. I was just looking up, if everybody knows this today, we have triple witching for today, which means we have stock expirations, index expirations, and index futures expirations all happening today. And you'd think the market would care, but what I'm seeing price action wise today is it cares a little bit, not a ton. Come here. The golden boy coming to hang out with y'all today. So we had a slight gap lower today. I am looking for price to possibly find 564 on the SPY. If it wasn't Friday, I would be interested in a trade for a couple of days out. Like I don't really love going long option 0 DTE, although the market is behaving to the downside, and I could see us just kind of slowly drifting a bit lower where, you know, this close from Wednesday and this huge gap up just gets faded a little bit. But if we come down to this level, is that enough to spark a rally back up to these highs? I don't know. But I've already made some good trades this week, had a decent amount of profit roll in. I'm kind of on coast mode to wrap up the day. There are some other trades I want to look at. I want to get some futures trades in both directions. One thing I think we see, poor performance in triple witching weeks. So you have triple witching March, June, September, and December. And that's when you have these alignments. It's usually the third Friday of every of these months where you have all those expirations coming at the same time. The average return is not great. The market may be down, but we actually started with a slight gap lower anyway. So the market actually gapped down right around the triple witching averages, which is around 0.5%. So this close from yesterday to the open so far and pushing lower slightly, we're down about 0.74% on the day, which actually might seem like, oh my gosh, is the market like, you know, pooping its pants today because we're down in red for the first time since this big CPI flip we had on the 11th. So here's what I'm pretty mindful of right now. Where we are trading here, where we're trading right here is, let me change the color. This is an interesting spot because just based on price action, FOMC lows and the post FOMC breakout highs, I could see price actually hanging out in here because that's a pretty big range, by the way. If you think about those levels, how many points is that on the S&P? If we go from this close to that, that close, that's a 9.73 point move. So almost 10 points on the SPY. That's a big move. That's 1.73%. And if we go from the FOMC close to the FOMC high or post FOMC high, that's over 2%. So I am going to do this. I'm going to put in a little tiny horizontal line there and off the FOMC low horizontal line there, because to me, I'm looking to see, you know, where price wants to go. If we break below the FOMC low, I think there's room to the downside to come back and have some volatility, you know, maybe make a higher low, maybe come back to that CPI swing and that, whatever that September, that post Labor Day sell-off low was, or we stay in here for a while and maybe there's not a lot of decision. And I could see that happening too. Even though we're wrapping up the quarter on the 30th, we're wrapping up our final week of trading next week on Friday, the 27th. But if price doesn't want to go anywhere, okay, fine. There's ways to take advantage of that. I think that the market kind of showed that it got all excited, but that might be fading a little bit. I don't know if the bears are necessarily coming back in to take over. They probably won't. There's a good landscape right now to see that the market's still relatively excited for this renewed growth and this renewed expansion that's still there with now more accommodative central banks. So it's not that the Fed is necessarily easing, but the Fed is normalizing. Okay. But normalizing in what was pretty obvious through July was a softer economy, or things were looking like they're turning softer. We still have employment data to get through. And this is what's going to be interesting with good news is good news, bad news is bad news. With the next round of employment data, is the U.S. going to see, you know, better non-farm payroll numbers? Are they going to see lower? In fact, unemployment claims this week were down like 10,000, right? What was yesterday's unemployment claims? Yesterday's unemployment claims 230 came in 219. So the market got a little excited that in addition to the push up all night with futures, and we had the post Fed move. So not too bad, right? So that's a good sign that like unemployment claims are getting lower. Now we come out with non-farm payroll on the 4th. Then we'll see if the non-farm number is good. If it is, then all of a sudden, hey, this labor stuff is looking a little bit better, and unemployment claims coming down, and maybe the unemployment rate stays the same. It doesn't pop up any higher where the SOM rule is activated. So, but I will say the big winner for all this has been gold, silver, and Bitcoin. If you've been watching those charts, things are still ripping higher. So I want to talk about those today. Yeah, so Lee says, how often does triple witching occur? It's March, June, September, December, only 4 times a year. And so that chart that I pulled up here had the last 14 triple witchings going back to 2017 and 2021. And so the average performance has been down about 0.3% or 0.5%. So most of them have turned negative. But what I thought was interesting was the standard deviation is about 3.04%, which is about a third higher than average. So if you have other expiration weeks, you've got the non-expiration weeks 2.17, other expiration weeks 2.12, but triple witching, you get about a 25 to 30% increase in volatility. So I mean, and look, volatility doesn't necessarily mean direction. We could have volatility do something like this: down, oops. You could have price go down and up and down. That's volatility, right? But if it's down, up, and down, and we finish here, the market's down 0.5% in red, and that just throws in the statistic of how many times we're tracking triple witching and what the performance is overall. But the market might just be giving back a little bit today. So yeah, I mean it's just another day, but there's $5.1 trillion of expirations today. So I thought maybe it means something, right? So your S&P by day during triple witching since 2021, the number of returns, you've got 14 triple witching since 2021. The average return on the Friday with all these expirations like we have today is negative 0.52. The median return is actually worse than that at negative 0.68, and the percent positive 14%. So we're looking at most of the time, triple witching's a negative day. Doesn't mean it has to be like a horrible thing, but it means, today's a down day. And so far, we're actually proving that we're already down, 0.6, 0.7%. Okay. So I thought that was interesting. All right. Let's take a look at some charts. Yep. So S&P, I'm going to box these in just because we did make all-time highs again in the S&P. We're sitting right in between the FOMC low and the breakout high post FOMC. I wouldn't be surprised if price uses this as the more intermediate structure, right? So if the market fails to break higher, fails to break lower, we deal with some indecision here. But if and when we do break higher, lower, I think there's going to be some momentum behind it. And I don't know which direction, of course, but whatever happens, I want to be, long, and I want to be short, and I'm going to take some stabs at the downside with some inexpensive hedges, and I'll be long to the upside just for this positive drift and see if we can, in fact, hit a 585 or a 590 or maybe even 600 before the end of the year. Okay. It just depends if the market feels like front running the election or if the market still has to wait for reality like, hey, we should wait and see if data comes in positive. Because if it does, then maybe that's the catalyst the market needs, right? It would be easier to justify, and it doesn't have to happen, right? The market can be irrational a long time, but it doesn't have to wait for employment news to hit. The market should be like, you know what? Everything's great. The Fed is cutting rates. All central banks are cutting rates right now, except for the BOJ. But look what happened to the Japanese yen overnight. Japanese yen was super weak overnight because they didn't do anything with rates. So if you looked at the currency strength chart, Japanese yen was the only outlier that was clearly moving and moving weaker in a big way. Now, I said I didn't take the trade. I didn't post any alerts on this, but I did say that I was expecting JPY to get weaker. It did deliver. I just want nothing to do with the Japanese yen. I was considering that trade on the 6J, which is the Japanese yen futures trade, just doing a bear call spread. That would have been really nice to have it expire today and pay out for some profit, but I didn't take the trade. Anyway, if anybody traded the yen, it was weaker. That was the likely direction, just because technically the dollar yen hit those divergent levels, and not too bad. Okay, so S&P right here, kind of in between the post breakout and FOMC low. If we go to the Nasdaq, I'm not going to box it in the same way because the Nasdaq is up here towards these highs. Actually, you know what? I will. I don't want to make my chart super messy, but that is the post FOMC and this is the FOMC low right there. And I don't need to keep these blue arrows. That was for my trade alert for the 471.50 kind of center price on the Qs. We got all the way up to 486 yesterday, and I believe my long side is a 474. Let me confirm that. 474. Let's go here. Qs. Oh, where are you? There it is. So my long side is 473. Right now, this is trading for 11.74 with my break even at $11.50. So I want to see a little bit more price one way or the other. If we break the highs, great. If we come back down to the lows, okay, fine. But I want to see a breakout one way or the other. And I'm giving myself time. I'm looking to see over the next 2 weeks. This is out to an October 4th expiration. So through next week, the 27th, and through the following week, the 4th, is the market able to do at least a 1 week daily or a 1 week average, which is around $19. I need this thing to move 11.50 for me to make money, right? So anything over 11.50, I'm protecting profit. But we have an average weekly trading range around 19 bucks, and so hopefully somewhere we get a $19 to $20 directional move, and I can grab some nice profit. But I'm just going to go ahead and box in that FOMC low plus the breakout. There's clearly momentum some way. I mean, if the Qs can break higher, this is a gap that'd be filled, but we also have all-time highs. The SPY has notched several all-time highs. The Dow has notched several all-time highs. The Nasdaq is always one of the best, indexes to recover. It gets beat up the fastest, but it recovers the fastest too. There's more volatility, but the Nasdaq for the last 20, 30 years has been the best performing index in the US by far. It doesn't come without pain. I mean, we've had 30, 40, 50% drawdowns, but it also tends to recover and then go way, way higher because it's all tech. And tech typically has better margins, better growth, better momentum. And although it's volatile, a lot of traders make a lot of good profits on the Qs for those returns. I just think it's important to watch your your risk because it can be uglier. Yeah. Okay, so I'm just going to watch that on the Nasdaq. If we do break this post FOMC high, there's a gap fill that could potentially be right up here towards 493 or even 496, which I'd be watching those pretty carefully. That would be right around that $19 to $20 move. If we go to the downside, I'm looking at this post Labor Day sell-off move right around 450. We will see what happens. But until proven otherwise, price right now is in between, right? Because if we think about this resistance, this sell off that just broke this high, this market might use this. Check this out. If we have a high, and this market's going to use this as some type of reversal pattern, this might just do this, consolidate here, and then go higher. So if we have some consolidation on the right side of this trend line, or it comes back to the trend line and maybe uses it to get down to these lows, I like this area as a buy zone to get long. So if we come back to this Labor Day sell-off low, I'm going to take a stab at the Nasdaq. And if we come back down to the August 5th bottom, I'm definitely taking stabs, plural, at the Nasdaq. But if we just accumulate in here, I think we're going to have to wait for price to give us a catalyst to break out higher. And if it does that, we could be breaking out, making all-time highs yet again on the Qs, all-time highs again, the SPY, the Dow. The Russell might still play catch up, but we'll see. Okay, that's my Nasdaq. Let's go to the Dow. So we had a FOMC, push back down to the lows. We broke up and had that huge gap to the upside plus all-time highs. We're sitting right in the middle. Here's my Dow. There's my post FOMC high. There's my FOMC low. I'm going to tighten that up just a little bit. FOMC low and post FOMC high. So I just want to watch that as potential indecision. Now on the DIA, you can see that I have resistance here and resistance here, and we hit resistance on the Dow. Part of me actually wonders, you know what? I'm going to take a look at a trade right now. I'm going to put in a bear call spread over the weekend on the Dow. Let me see if I can take a look at this one. So if I go to the, what, dude? There's not a 23 expiration on the DIA? What the fudge? So I have to go out the next Friday. Man, I was hoping I could take a trade for Monday. Let me do this on the, maybe I'll do this on the Qs. If we have 486, let me see what like a 487 QQQ trade looks like. QQQ. September 23, 487, sell. So I get 14 cents on that trade. I could probably do this with an NDX, maybe make a little bit more profit on this one. So NDX right here, 19960. Let me see if I can get like a 20. I'm going to go 20,000 for a Monday expiration. NDX, Monday is the 23rd, 20,000. 10 points wide, get a $1.50. I'm going to go after an income trade there. So probability profits around 80%. Maybe what I will do is, this is a trade for Monday. Is price capable of working its way higher today? Usually Mondays and Tuesdays start off on a rough note. Let me see if I can get filled. Let me get filled for like $3. Okay, I'm going to put this as a pending order in the Discord for my my portion of the A1 Trading Discord in the signal and the alerts. I'm going to put this trade in. So I'm going to go after $3, try to get filled today, which I may not get filled. I would have to settle for $1.50, but I don't feel like risking 50 to get $1.50, even though I think the probability is decent. Monday will probably start off on, maybe a rougher note. Usually Mondays, Tuesdays are making lows for the week, and then we rally the rest of the week in an up week. So I will set this up for, let's see, or let me see if I can go 5 points wide in the SPX and do the same thing. SPX is a little bit tighter above the post FOMC high, 57.36. Let me see what that pays. All right, I'm going to debate between the SPX and NDX. So if I went Monday and the high around 57, I'll go like 57.50. 57.50. So that's an 89% probability. That's an 11 delta. Go 5 wide, get 50 cents. I want to go for a $5 spread. I'm going to try to get $1 for this one. So 1 divided by 5 is a 20% premium. I think $1.50 is what I'm looking for. Yep. I'm going to take this trade, 50-cent credit. Don't love it. Probability is about the same. I'm going to go after $1.50 on this one and set this trade up. So I'm going to go after $1.50 risk for $3.50, or $3.50 risk for $1.50 reward, and set this one up. Let's go $1.50 pending in. Okay, and then similar there. I need about 45 seconds to get these in the accounts. Similar. $1.50 is okay. There we go. There we go. Okay. So that is a 57.50 by 57.55. So just above that high right there. Oops. And there is my picture. Anything down here is profit. And it's a 9/23 expiration. 57.50. Sell call, 57.55. Buy call, $1.50 credit pending. Okay. So if price comes up today to fill that, I'm going to take a stab at that for Monday and see if we just edge a little bit lower for Monday. If price goes down today, likely this isn't going to fill. I might cancel this by the end of the day, but I'll make that update in the Telegram channel. Okay, let's do, here is the trade. This is going to be an index trade. So SPX 9/23 Expiration. I'm just typing this in the A1 alert section right now. 57.50 sell call, 57.55 buy call, $1.50 credit pending. So setting up bear call spread above the post Fed rally Thursday. Looking to see if triple witching plus Monday will offer a slight drift lower for Monday income. All right, I'll take a screenshot of this. And thanks for letting me do all this while I get it updated in real time. And post my little disclaimer. Okay, and if that's not filled today, then I'll update. I might cancel the trade by the end of the day, depending on where we are. If price is going to do this, here's how I know I'd get filled on the trade. If price rallies back up, to fill the gap from the close yesterday or rallies back up towards the highs again, I'm likely getting filled for that $1.50. And I'm looking to see if the market fades by the end of the day or starts to, move a little bit lower on Monday. Okay, so there's risk in the trade, but I'm trying to get about 30 cents or 30% of the premium, which for a credit spread is pretty standard. Okay, all right. Let's move on. Let's move down the list. I want to go to the Russell for a moment. So the IWM, this one, I mean, we could kind of box in the same thing. If I look at the FOMC low, which is right there, move that over actually. And the the whole high, I mean, the FOMC low and high is still, it's incorporating 3 days of trading now. There's still some room. I mean, take a look at the IWM. There's still some room to get to the highs, right? Taking out these highs, still not at all-time highs, which is all the way up towards like 245. But if there's room to make a break for it, get a pullback, there's kind of a midpoint rolling through this thing. And what we still see here in the Russell is we're making higher high. I mean, this might be a new trend that starts. I'm going to keep an eye on this to kind of buy some levels, add some more option trades on IWM. If we end up using this level of support, higher low, let's say we head up here and use this as, I mean, if it's going to like respect this resistance, but if it blows this top off, then I'm all about that momentum to the upside to try to get to 245. So I'm going to be watching the Russell carefully. I do have levels I want to buy. I might end up, moving these up if price looks like it is in fact just moving higher. Okay, VIX, we're at 1601. Even with the FOMC, even with triple witching, VIX is still relatively calm. Certainly not down to 12, but in the teens, 15, 16. I'd say low to moderate volatility. Low to moderate. We're not doing anything crazy. SVXY, I'm still long in this one. The dollar index. Did the dollar index do anything convincing? How many of you were looking at the dollar index like I'm going to be long or short? All I see is a bunch of noise. This is another one that I think we should keep a close eye on. If we make a fresh break below the FOMC low, then there's some follow through. If we make a breakout above the FOMC high or even this level, this is the recovery slash, the squeeze. If everyone's short the dollar, Forex is notorious for those little, contrarian plays. So if the dollar's oversold, the contrarian side of it is everyone's trying to sell the dollar. Everyone's, net short or whatever the dollar. And I mean, you can look at your Edge Finder commitment of traders to see if who look. Let's look at that actually. Let's see. Let's look at COT for the euro dollar. Because if the retail side is still net short the euro dollar, that means the euro dollar should probably track higher. So let's go sentiment COD data. So we are looking at the dollar right now is, I'm seeing net longs on the dollar. Let me look at the percentage change. So the dollar actually flipped to a positive positive stance, not by 3.53%. Yeah, it's like 73% long dollar, 27% short dollar. Let's go smart money indicator. So right now we're showing that retail positioning is short euro dollar. So that means euro dollar is probably going longer. Well, I mean, this is fine. I would like to see this. We clearly have some noise. I'd like to see a little bit more chop in here. Okay. And just see if the dollar can make a breakout. If all this is a big bear flag, right? If we have a big bear flag, something like that, I mean, I just don't be fooled by like some type of fake out here, because that's probably a manipulation move, and then the market sells back off. I'm pretty keen on selling rallies on the dollar. If we come back to this level here looking for some resistance, we come back to this halfway point looking for some resistance, I would be watching for turns. I'm not just going to sell those levels necessarily. I'd be looking for aggressive turns and confirmation on any type of visual alignment system you have. Look for some trends to confirm going bearish again. My least favorite trade is going to be this. That's my least favorite trade, because we're already at the lows. I don't want to sell lower. But if we have a break, pause, and then we pull back, I mean, that's fine to look for a sell there, because this is structure lows. So if we have a break, pause, and it pulls back, I'd like to sell that level and then look for lower lows. And I have said this for months. If the dollar gets weaker, everything else looks really good to go up. Gold, silver, Bitcoin, stocks, everything looks good to go up. Respective currencies, sure. But man, the indexes I think can go really nicely, even irrationally higher with a weaker dollar if we actually get that move. And it's right there. I mean, this dollar is, I mean, you could say it's kind of on the brink. Like if this dollar gets weaker and takes out this summer 2023 low, there's not much stopping the dollar to the downside. The last major structure that we had was way the heck down here at 90. I mean, that you talk about a sweep pattern, high to low, lower high to lower low, hit some symmetry around 94, and then any type of pullback here, then another push lower for a fifth wave. Dollar could come all the way back to 90. So I'm not interested in buying the dollar at all unless price proves that we're going to actually flip around. But I don't see that right now. If we're going to see risk appetite, the dollar is likely not getting stronger. Okay, that's a big trade-off. Any questions on that? All right. Oil. Oil is at 70.82. We've come a nice ways off these lows. Obviously, we sold off about 20+% on oil, but we have responded with about an 8, almost 9% rally to the upside. Again, it's not ripping by any means, but this support level and structure is holding. So I'm long on oil, and I'm going to stick with that for right now. CL is what I'm trading. That's my trade right there, 65.5 by 64.5 for 50 cents. Let me see what that's trading for right now, actually. We go to CL. And I got in for about 50 cents. If it's up like 50% right now, if I'm trading it like a 25 debit, I might just take the profit and use that capital efficiency elsewhere. So let's go to CL. 65 by 55. That is a naked put hedge. This one is the 65.50. What up, Frank? How are you, man?
Pretty good. How are you?
Good. Let me check this one. Oh boy, decisions. Oh, I can make 250 bucks right there. I think I'm going to take the trade and not worry about the potential outlier risk. This was a trade out to November. I think I'm just going to take the profit right now. So I've got a 65 by 45, or I'm sorry, 65.5 by 64.5. I'm going to take this trade off as long as I can close out for 25 cents. That should give me $250 of profit. Okay, not filling. Let me go 26 cents. The ask is 27. Come on, 26. Fill to 26 cents. All right, I'm going to take this trade off right now. This is an update in my alert section as well. This is under futures. So if I go to the top here, I'm going to update this one with a, where the heck is it? Let me update this one with a reply. So let me reply /CL.
What are you taking for 26 cents?
I'm taking profit. I had a 50 cent. I've had a 50 cent credit instead of waiting for the next 3 months to give me profit. I'm just going to take the 50% profit right now and be done with it.
Okay.
Bull put spread. 50 cents credit, now showing 25 to 26 cents debit. I'm closing for 50%, take profit, and moving on. Okay, so let me throw that in my reply. Taking that trade off. All right, so now I'm gonna do the same thing in these accounts. Frank, what do you got for me today? What are you gonna make me trade today?
Right.
Just kidding.
Kind of looking at. Sorry, I didn't hear you. What'd you say?
Oh, I just said, what are you gonna make me trade today?
Oh, I'm looking at the SPX as always.
Okay.
I'm thinking today, maybe towards the end of the day, we're gonna get a flush lower, because that's when all the options contracts expire, futures contracts expire.
Yep.
So, maybe we could get some good, I guess, like credit spreads down there if we want to look at selling puts over the weekend, selling bull put spreads. I think you'll get more premium because it's over the weekend, and you'll get, if we do get a hard move, then you could be in a good spot. I don't know, but I think if you take a bull put spread on a last minute flush on the market, and you're looking for tomorrow's expiration, I think maybe that could be a trade. So I'm kind of debating on that. Right now, we haven't really moved anywhere. We kind of opened up at 5,700. We're still kind of around that zone. So I'm wondering if even the triple witching is going to do anything, or if we're just going to hover around break even. But, I'm not sure if I'm going to be looking for like a huge sell-off.
Mm-hmm.
But yeah, every analyst is super bullish right now. So I don't necessarily think we could look for any, shorts on the market other than
I think
what we've seen already.
Yeah. So you had mentioned bull put spreads. I'm not doing that right now. I am looking at so price is right here. Here's our FOMC low. There's our post FOMC high from yesterday. I could see price staying inside of this. I could see triple witching being a bit of a non-event. I put in a trade. I haven't gotten filled yet, but I did an SPX trade where I'm doing a bear call spread up here because I'm looking to see if triple witching will actually, stay where it is, struggle to take out the highs from Thursday, but just work our way down. Like one thing that might, again, this is random, but all the anticipation is triple witching today. But what would be the big like middle finger to all traders out there would be like, we don't move at all today, and then Monday is like this weird, aggressively directional day. In fact, that was like the first week of trading on a Tuesday. This was this sell off was a Monday. One of the some of these like bigger directional days have been Mondays, which have been a little bit more surprising to me because usually Mondays are fairly quiet.
Yeah.
But anyway.
I don't know. You're saying there's gonna be massive order flows, right, towards the end of the day, just because everyone's got to get out.
Arguably, I mean, triple witching can also be. It's averaged about 0.5%. It's already moved 0.5%. So there might be some scrambling late in the day. I've got a gamma level around 564 on the SPY, which would push us down another $3. That doesn't fill the gap from FOMC lows. That's just kind of right here in the middle. That's about the only thing I see on the radar that would be like, okay, if we go down a little bit, this for today, I can see that level being tested. That's about it.
Okay.
But I'm not taking a 0 DT down to it. It's like, I took a trade this morning and it was perfect. Like little SPX trade there, made some money, and that was it. And the market's actually been quite cooperative for the last couple of hours, or I guess about an hour and 20 minutes into open. So yeah,
I'm also thinking if we got that today, we're probably kind of limited on upside. So I'm wondering if we're just going to stay where we're at or move lower. I'm looking at 57.10, 57.15. I think that's trading at like let me see the credit.
Okay, you're going tighter than me. I just put on a trade here. I did a 57.50 by 57.55. It's trading for about 50 cents right now. I put in a pending order for $1.50 to see if price were to come up at all today. If price were to come up at all today and fail at that high, that should get me filled at $1.50, and then see if it fades and then maybe has like kind of a gap fill, like indecision day for Monday. So that's what I put on. Is I went up higher than you're talking. You're talking about not quite above the Thursday high. You're talking a little bit tighter. Say 57.10.
No, not 730s or 40s, but 710 to 15, because that's where we opened up at. Yeah, we opened up at 710.
Are you talking about today then? You wanted
And
to like to trade for just today?
yeah,
Okay, I was going for a Monday
probably.
trade, not today.
I'm
Here's
thinking
that.
that it's probably going to be price action to the upside is probably going to be limited.
Yeah.
Just for the day. Yeah. And if we do get that flush lower, it will look really nice.
We're right here, man.
Premium side.
So this is something to watch for today on SPX. If we hold, this is the gap higher pullback, and then the rip for the remainder of the day that melt up yesterday. We're right back down to the same low. If somehow price actually breaks that low, there could be some unwinding, because that's an open gap right there for the SPX and the SPY. Everything gapped up big yesterday. So if we break that lows around 56.90 to 56.85. If we see a nice confirmation below that, there could be just a little unwinding to the downside. So my only concern with your 57.10 there, Frank, is that's pretty tight to price. Like right there is saying that it doesn't come up and even test today's candle at all. Right? It's just tight. That's all. I mean, it's fine. But if we were to, I mean, I don't know. You could be spot on, dude. I mean, if you call that, I'll cheer it on. But I'm putting my trade up here. 57.40, 57.50. I want to be out of the way. So that's my style.
I mean, I'm trying to think, why would we end up higher today with what's going on? Like, why would we end green today?
I don't know. Why did we end up 2.5 to 3% higher after a Fed crash on Wednesday? Like the market clearly like was noisy and manipulative, and then it just ripped up on Thursday. It's like I didn't expect that. So market definitely does things I don't expect. Yeah, I mean the market does whatever it wants, but I mean, why would we end up higher? Because the market's still optimistic, and structure-wise, this is a low, and the market bids it again. So we find a way to claw back, and we stay. Look, we stay like maybe this is a whole thing of like you get a 0.25% pullback, 0.5% pullback, and the market's like good enough, buy the rip or buy the dip, So I don't know. I'm so like skeptical on just the blow off top. But I mean, looking at the S&P, connecting some dots here, if we have resistance, it's very possible. Resistance, there's still room to rip. But do we pull back first to like fill a gap? Do we have a higher low in here that gets started before we go higher? I don't know. Do we come back and retest the Labor Day sell-off lows? I don't know. But this is a structure I'd be watching. Where would I get long? I'm going to buy the S&P here, and I'm going to buy the S&P here. That's it. I want to wait for those opportunities. Like I'd love to do like a 5 or 10 contract trade at these levels, because I think that's a good spot to be buying and seeing the market hold, and then seeing some good support in the market. But I'm not doing anything massive here. It's like I'm just taking stabs. Like, and as we're talking right now in the last few minutes, look where we are. And we're right back down to that low. Like that's getting a little bit more aggressive here the last 15 minutes of trading. But that's going to be the critical spot. Can we break that low at 56.86 and close below it? Because if we can, now there's room for a gap to look like we have the ability to fill it. It may not fill it today. I mean, that'd be crazy if it does. But if we do fill it today, then freaking sweet, I guess. It just means I won't get my SPX trade filled at the top. But if we bounce here, we just stay sideways, and triple witching becomes kind of a bit of a non-event. That's why I'm a little skeptical for Monday, because who knows? Monday could be like a weird directional day when it's like, yeah, we just waited for triple witching to fake everybody out, and then all the real order flows come in on Monday.
Okay.
It's anybody's
game. So you're thinking
dude.
that if it's a non-event, price doesn't really move today, you're thinking tomorrow or Monday could be a heavy swing lower.
I think Monday could
Okay.
be one of those days. Like typically, like Mondays are usually the low of the week. Like Mondays, Tuesdays are usually like like sideways calm days or pullbacks, and then the market spends the rest of the week pulling back. So if we start off on rough footing, let's just look at a week. So we go Monday, and let's say the market is flat or down, and then you've got Tuesday to kind of stabilize, Wednesday to help correct, Thursday and Friday to try to get back up and to salvage a green week. I mean, I would be curious to see. I mean, I know historically you've got about 54% of days are bullish. I'm curious how many weeks, if we have how many weeks are bullish percentage wise. I'd like to actually I don't know. I don't. Can Chat GPT give me that? How many weeks a year does the S&P finish positive? 56.1 chance of closing any given week positively. By the way, out of 2871 weeks, there are 2 weeks where the S&P closed entirely unchanged, 1965 and 1977. So just on a weekly average, I mean, I'm not saying that's a crazy edge for traders, but 54% chance of a daily bullish move and 56% chance of a weekly bullish move. I mean, that's why if you have any pullbacks on Mondays and Tuesdays, you're really getting a chance to buy lows and then see if the market just recovers a little bit. So I don't know. It's not a bad
Yeah,
play. Yeah. I mean,
I like
the
that.
market's
So if
shrugged
we
off
get a
pretty much
rip
everything for
lower,
90 years. So
say
what'd you
say
say?
we get a flush lower either today or Monday.
Okay.
Let's say it's Monday. Would
Okay.
you be taking like a bull put spread there?
Um, so if you're saying if we had a flush down for Monday,
Yeah.
is that what you're saying? If we have a flush down Monday, I'm probably not taking a bull put spread there. If we get a flush down Monday, I'm probably looking to see, does this market actually go somewhere like this, where we have a bit of a fake out trade? You and I talked about like a broadening pattern. I'm just trying to make some sense of like where would this broadening pattern be? I think this structure, this is why I kept it on my chart, because if I'm connecting highs, connecting lows, I mean, if this is going to be an interim top, do we fill this gap in the Fed? If there's momentum to that, do we come back down and try to revisit this Labor Day sell-off? Because if we do that, I'm not going to do a bull put spread at this FOMC low. I'm going to do a bull put spread at the Labor Day low, and then maybe this August 5th low. So I'll get
Yeah.
there and there as far as I would take this and hold it to expiration, looking to see if the market goes up. I think those are pretty good opportunities to me, at least to establish some credit spreads.
I
So
like that too.
yeah, it's not
I
bad.
think
What is anybody
I don't
just
know.
clacking away at gold and silver? I mean, gold's up again, all-time highs. Awesome. Like
I
it's
keep wanting to get in
seems like the
gold
easiest
and
trade in the
it
world, but
won't won't slow down.
yeah. What are you
Can't
doing on
chase
gold
it
to
up
try to
here.
participate? Anything?
I'm just trying to buy GLD.
Okay. Yeah, I mean, I'm definitely not buying all-time highs, that's for sure. But I mean, I've got let's see, about $6,500 of profit on GC for futures. Um, my Baidu trade looks like I'm gonna take an assignment today on Baidu, that 90 by I think it's 90 by 70. I'm taking an assignment there. I'm gonna repair Baidu. I'm willing to take some ownership there. GLD, I still own it. I'm up 10 grand. I wish I owned a lot more of it, but what makes up for my little, to me, kind of a baby position in GLD, that's where my SLV is much bigger, like 37K and SLV trying to go after hopefully double that. I'm hoping I can get like 60, 70 grand out of SLV. And then GLD, if I get a pullback, great. But I'm trading a lot of futures just to generate the income along with the direction. SLV is a combination of credit spreads, naked puts, own shares. I've got it covered up to 35, which is above my first measure move at 33. So I'm sticking with those. Like I like them a lot. I'm kind of, I don't know, and maybe I'm like putting too much emphasis on silver, but I just hate buying gold at all-time highs. And at this stage, since we've made
No, that's fair.
1, 2, 3, 4, I mean, we've made 5 all-time highs in the last 2 weeks of trading. And I mean, a pullback here would be fine, but maybe that's all we get. I mean, I want to see something, I guess, a little bit better to offer up. Like, just give us a better pullback, would you? So I don't know, but if the
I
dollar
think we're going to get
is
a
a
minor pullback.
yeah, but is the minor pullback going to be dollar related? That's what I'm debating. Is like the dollar's choppy. The dollar's at those multi-year lows right now. I could see the dollar, getting stronger in the near term just because it's a bit oversold and overextended. And I can see gold. I mean, we saw that reaction on Wednesday too. Gold dropped as the dollar. I don't want to say pop because that's annoying to rhyme, but the dollar did jump up on Wednesday after. If I could go back to the currency strength chart, we saw the dollar immediately get flushed down, and then by the end of the day, the dollar was back up. It gave back all those the weakness. So that was where gold was indecisive. But then Thursday, Friday, gold's like, yeah, we're still going, we're here. So anyway, I mean,
Yeah.
dollar short term could give us a pullback on gold, but I don't know, man. I mean, I guess the good thing is if you're long gold, just keep moving stop losses. At this point, like if you don't get a pullback, I'm probably not buying much the all-time highs, but I'm just gonna wait. I mean, I've got some credit spreads in here. I'd like to see a pullback so I can put. Here's why I want to pull back, because even if I don't buy more gold, what I could do is a pullback. Let's say a pullback to here. I could go far enough down to then place a credit spread. And that way I can get out of the way, but that little sell off can increase the IV, increase the premiums that I can sell. And I can say, look, I'll sell it lower and I'll still get paid a decent credit if it doesn't get assigned, but I could also, manage my GLT position a little bit better. So that's why I want to sell off is I want to sell premiums with some type of sell off or pullback so I can space it out properly. I hate doing this. I hate doing a bull put spread, here or here and the market pulls back. I'd rather see a pullback first, then do my bull put spread and try to space it out so that has a lot of room to go up and generate the income.
Yeah.
Okay. So
I like
here
that.
is where we're at. We're getting a nice little break below yesterday's. I mean, you call that yesterday's low, but that's obviously intermediate because we had the gap higher, the pullback intraday. But if we continue to push lower, so far for the day from close yesterday to now, I want to say we're pushing close to maybe 0.8% lower. It's not so the SPY shows 0.8% lower. Let's go. Yeah, let's go SPX. So from the close yesterday to current price, we're about 0.5% down on the SPX. On the S&P, yeah, a little bit more pronounced. So there's about 0.82% to the downside. It's currently showing 0.83, so it's right there. Yeah, interesting. Everything's down today. So Thursday's little rip and melt up, finish on a high note, but today's giving it back a little bit. Qs are down 0.7, Dow 0.5, Russell down 0.68. SPY's actually down the most of all the indexes, which is pretty interesting. Gold is still up on the day. Silver still up on the day. Bitcoin's all the way back up towards 60 and change. Here is 64,000. Well, I've been watching Bitcoin for that type of trade. I'd like to see a pullback still. Maybe a little accumulation here in Bitcoin could be where I look at a bull position. Risk appetite on everything could be also favoring Bitcoin. End of the year run would be pretty fantastic for I'm sure a lot of enthusiastic bulls in Bitcoin. I don't know if it's there yet, but
I have a plan on Bitcoin.
what are you doing?
So I have one on Bitcoin and Ethereum. They're debit spreads, vertical plays, I guess. So I bought a
Okay.
call at the money at the time. It was at $20, which so far this trade has not been like doing much for me. But I bought a call at 20, sold a call at 29 on BITO. And wait, let me share my screen real quick.
Okay.
This is going out to, I think it's March. Yeah, March 31st of next year. I have a 20 by 20 something. I paid $1.80 for it. And that I think it's a 9-point move. Yeah, 20 to 29. And this is for March. So if we come back up here by the end of the year or beginning of next year,
Mm-hmm.
it would be a great trade. But so far, I mean, I've had this for I think since the summertime. So,
Yeah.
I'm still at like the option itself is worth, let's see, I think it's worth like 140. It's worth 122 right now. I paid 180 for it.
Okay. I have mostly January expirations. I've got a $20 naked put, and I've got $23 long calls. I own some shares of BITO. The one thing I've been disappointed with on BITO is it's not correlating the same as Bitcoin. If you compare, let me take this chart here. Let's do an overlay, BTC. So let's just overlay the chart and then compare that to MSTR, which is MicroStrategy. Compare that to IBIT, which is the BlackRock ETF. Okay, these are all fudged up now. Darn it. Let me get rid of
I know it's not very correlated, but
it's
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 not
just pricing out weird, that's
100%
all.
correlated.
Yeah.
Yeah, it might underperform, but I mean, if Bitcoin, let's see, if Bitcoin goes back up to 70s,
Oh,
70,000,
I'd
BITO
love it
should
to
be
get to
well
33.
into the 20s.
Yeah, no, I do like the
Um,
trade. That's huge upside potential, man.
it's also got an incredible dividend, which is a really bad sign. It's got a
Yeah,
56% dividend.
I know.
Um,
I would trust that 0%.
and it's already come down this year as much as its dividend pays.
Has it really? So
um,
what? That's wild.
it's come down 50%, and
Wow.
it
Okay.
pays a 56% dividend.
Yeah, well, I think I'm probably going to cap my BITO exposure. The reason I got into it in the first place, I mean, I had a good run. Like I was long calls and doing some credit spreads when we had that rip from 14 to 30. But the pullback here that I started to dollar cost average into, I'm trading if I'm doing one ETF, which I am. I'm trading BITO. I still have some exposure there, but I'm trading IBIT with the BlackRock ETF just because it looks a lot like Bitcoin. Like
Yeah,
here's IBIT. It obviously doesn't have all the data that Bitcoin does, but it's been behaving with the same type of choppy accumulation like Bitcoin right there. So to me, I like that when I just spot check it. It looks the same as Bitcoin, just a different price. So I kind of trust that one a little bit more. Like if Bitcoin were to go back up to 74, possibly make a fresh break, I would believe that IBIT is going to make that similar type of run. So that's the one that I'm actually willing to
can
kind
you
of throw
look
in
at?
some. What's that?
Can you do options on
Not an
IBIT?
IBIT. Nope, not yet.
You're just owning it.
I just own it. Yep. I haven't done any options because they're not available. But that's why I did BITO because you can trade options. But when it's not trading the same way or correlating the same way, I'm not putting the same type of like passive dollar cost averaging into it. So I still have exposure. I mean, you can see I have shares and everything, but IBIT is a little different animal. So I have some shares there, and I'm just dollar cost averaging in. That's all.
Gotcha.
So there's some portfolio Bitcoin plays. Um,
Well, so today on the S&P, we broke lower from
uh-huh.
yesterday's, I guess, intraday low.
Yep.
We're ignoring pre-market
A little bit.
moves.
We're right there,
Um,
just a little
do
bit
you
lower.
think? Do you think after this, if we did break, we can confirm or help confirm that we're going to move lower? Or is this a time to be, you know, I guess looking at it to come all the way back to break even like it usually does?
Um, like I said, I'm not really super bullish. I'm not bearish, but I'm not super bullish. So my point is this: if we go down to fill the FOMC low and that close on Wednesday, this is not where I see the market buying the dip. That's just me. I'm not interested in buying the dip right here. How many what would that be, Frank? Like we're buying the dip at a 2% off of all-time highs when we have had a 10% dip and a 5 or 6% dip and a 2% dip. I'm not buying that. I'm not buying the low. I mean, I'll look at it this way, dude. If this goes higher and higher and higher and higher, I will make money on my entire portfolio. I have profits in ES that can still run. I have profits in NQ that can still run. I have profits in MES and MNQ. So with my futures trades, I'm still long on all these in addition to taking the stabs at the downside. So on top of that, all the other positions with positive drift, this should give like the broader market up. Like I mean, yesterday, I don't know if this was yesterday close, but we had like 78% of the stock market advancing. It was a very healthy broad market. It was mostly led by Mag 7. I think I took I didn't take a screenshot of it, but if you looked at the heat map from yesterday, it was like bright green Nvidia, bright green Apple, Amazon, Meta, Tesla, like everything was bright green. But we still had some, I think energy was down a little bit or whatever. Financials pulled back a little bit or defenses pulled back, something like that. Uh, but dude,
Yeah.
I can't justify just buying. Like I'm not jonesing to buy. Like I know the Fed just cut rates, but I believe that the market needs more than just the Fed to rip higher. I think the market needs another supportive round of data that's going to come in the coming
So
weeks.
earnings,
Earnings
good
season is going to be
earnings.
a good earnings would be steady and solid, and earnings might actually overshadow it. Like earnings could overshadow softer employment news, and earnings could overshadow even inflation. Like earnings could be strong enough to be like, who cares? Everybody's making money. Corporate profits are great. Rip higher. And the U.S. is like, they'll figure it out because the Fed's cutting. It's going to get better. Like the market can just think whatever it wants. But if the jobs numbers are like terrible, like they were back in July, and the market reacted to that late July and August, I just think that's one way to kind of put the market on its heels. And then earnings season just starts to kick off. And so it's going to be another interesting time where it's like, is the market saved by Mag 7 earnings? Is it saved by semiconductors? Is it saved by Mag 7? Is it saved by AI? Is it saved by other companies? Is it a broader market earnings season that's actually healthy? Like a
Yeah.
Walmart, like a Coca-Cola, like a financials. I mean, are financials looking better? Are like JP Morgan when they said that we overestimated like earnings for 2025 and all of a sudden they dropped 7.5% in a day. It's like, I don't know. So I just don't see the market having the justification to go 10% higher. So I'm not buying it. Like if it drifts higher, dude, great. That's easy. I'll just protect profit. Like I comb through my portfolio when it goes higher. Um, but I'm letting
Yeah.
things that have been set in motion stay in motion. And then if things are going to go bad, I want to make sure that I'm protecting to the downside. So if it goes up, that's the pleasant, cautiously optimistic bull. That's like it just melts up and we make a lot of money that way. But I am going to make sure that I'm pretty protected to the downside. And we're sitting here again. Now we've got about 20 or 25 minutes worth of selling, and the market has broken that low from yesterday's intraday price. And we've got a solid like two candles that are making a break for it. So we might have like a 1% down day on the S&P. We have a long ways to go. I mean, if the SPX goes all the way down to the FOMC close, I mean, that's another 70, that's another 60 points lower, dude. So, I mean,
The VIX
it could
hasn't moved.
happen, right? The VIX, I mean, because it's like maybe it's a slow, drifty sell-off. It's not like a gamma sell-off or anything, but it's definitely picking up some momentum here. Yeah, I mean,
I hope we can close the what is it, 614 or 5600, 5615. If we could close that today, that would be really nice. Is that what you
uh,
were talking about with the
yeah,
FOMC
so my
gap?
SPY, yeah, my SPY level's right here. So my SPX, there's the FOMC low. Move this over here. So this is my FOMC low, and then here's my post FOMC high. So I'm looking at this as if this gap gets filled, maybe the market stays here but struggles to break the high. But if we break through FOMC lows, that's a fake out, man. And I just think the market is potentially more volatile. So again, my summary is this. The market can go higher, and I'm not going to sit here and complain about it going higher. It's freaking awesome. If everyone's making money with the market going up, I'm happy. Everyone's happy. Nothing wrong with that. What I'm saying is I'm not excited about buying stuff fresh at all-time highs. I'm just not. So if I did some options
Why
and it
not?
generated some income, why not? Is that what you're saying? Because
Yeah,
I'm
everything's
looking at where
great.
it's going. I mean, if I'm looking at where we're going, it's like, yeah, 20 to 25 to 30%. Like the average move, by the way, during an election year is about 22%. We're up there, dude. I mean, the average move during an election year is around 22% on the S&P. And if we go back to January of this year to where we had the highs, I want to say that we stretched probably into a 20% level. I'm pretty sure we did. So let's start at this level here. We've gone up around 19.96%, give or take a couple decimal points there. But from the actual low of the year, right here, to the high that we saw on Thursday, the markets rallied 22.4% from bottom to top. Not saying that 22% has to be the top, but for an index, that's pretty good, right? Because the Nasdaq probably rallied 25 to 30% from the low to the high. And that's pretty good. And maybe a little bit of chop or indecision is fine. I'm just trying to be a little bit more opportunistic. Like if the market wants to offer us pullbacks, I'm happy to buy pullbacks. But I'm just managing. If it melts up, it melts up. And that's great. That makes my life pretty easy. That lets profits and all the positions I've built and accumulated over the last 9 months, it lets them all play out. If the broad market's going higher, I've spent months and months and months building positions for this type of move. So if we rally, great. All my work is paying dividends. But at the all-time highs, it's like I'm just not excited about this being the opportunistic thing where it's like I'm going to buy the highs. I don't want to. I'm going to try to wait for a pullback because I think we have employment news, which the market was clearly sensitive about. We still have inflation news, which the market can be sensitive about, even though it's ignoring it because they think that we've made this victory lap on inflation like it's never coming back. I think that's BS, dude. I think inflation is not going anywhere. And we'll be surprised by coming into like next year that inflation is going to be sticky at 2.5% or sticky near 3%. And the Fed is potentially going to break something with this whole idea that we're going to cut rates by 200 to 250 basis points. And the market loves it until inflation all of a sudden shows that, holy crap, we got another wave of inflation. It's back above 3% again. Now what happens?
Well,
The Fed backpedals and raises rates again?
I think if house costs come down and oil prices stay low and say the jobs market data isn't running rampant, like say it's cooling off or it stays steady, I think inflation could come down to 2. But
Do you think house prices are coming down?
if we get a hot jobs market, like if the next NFP is incredible and unemployment rate comes back below 4, just seeing good jobs data, I feel like that's probably it's probably gonna inflate us a little bit, and then that's what you're talking about is the sticky inflation. Then the Fed might have broken something, but it's hard to predict what's going to happen. I mean, CPI came down 0.5%,
0.4.
0.4%.
Yep.
That's a big drop in 1 month.
It is, but it's because oil dropped 20%. That was the big reason that inflation was lower. Is it was all energy prices. So,
Which
look,
is
man,
kind of what was holding
it's
us up
impossible.
there.
True, I agree, but it was shelter. It was shelter and energy. That was the two things that was creating the sticky. But here's my question: you said if housing prices drop, you think anybody wants to drop their house prices? Do you people want to sell their homes for less right now when they thought that in 2022 and 2021 they could sell at these crazy highs? I mean, house prices probably aren't
I
coming
mean, I
down
think
unless
they
you can't
will.
move it on the market.
I saw housing sales went down a lot. So, I mean, I think,
Existing home sales went down
housing
because
costs are
people
going to have
can't
to
move
lower
their
them.
houses. Yeah, they can't move the homes right now. But I don't think people
Nobody
want to
wants to
cut. They
buy
don't
an
want to cut
expensive
their.
house right now.
But it's not the price of the house; it's the interest rate at 6.5% and 7%. People look. I bought a house that was 1,000 square foot bigger with a mortgage that was only $200 more a month. If interest rates are lower, people will buy a house that they want and they're willing to pay like more for it because with an interest rate that's super low, they can manage it. But interest rates high is why nothing's moving right now. So that's the next big, to me, that's the next big leg of real estate is that rates have to come down. I mean, the Fed just slashed by 50 basis points and the 30-year mortgage dropped by 0.05%. So the 30-year rate right now
Yeah.
is at
Not a big
6.09 from 6.2. How does that make any sense? It's clearly not moving, tick for tick with the Fed, and it's going to take time to get that into the system. But your 30-year average is 6.09, which is like the lowest we've seen since, I don't know, 2019 or some crap like that. No, that's not right. 2020 was like everything was getting dirt cheap. 2022 maybe. I guess I just look at the chart. 6.09 was when.
Here's
Last time we were there would have been 2023. Yeah, we're just a ways off. I think for housing
here's
to
one
recover,
last note.
rates have to keep coming down. What's up?
Sorry, it's like delayed. So every time I try to step in, it's like it comes in like 3 seconds later or something. But
That's okay.
when you were talking about mortgage rates, I was thinking this is the yield curve I have on my screen. We're at
Okay.
0.14 now. So we're
Yeah.
continuing to rise. This is the the reversion or disinverted. I don't know what the terminology is,
Yeah,
but
that's right.
we are now back to normal levels, and we're going higher, which is, I don't know, kind of concerning to me. This is like the number one recession indicator, right?
I agree.
The fact that
Yep.
it's above the neutral zone and it's continuing to climb since August 30th. Could be a
Yeah, that's
month
not good.
within.
That's not good.
Yeah.
That's the bond, and that's the bond market
So
too, calling crap on the U.S. Like, and I found the correlation that the inverted yield curve has a lot to do with a tighter labor market, and the disinversion has a lot to do with a loose, softening, struggling labor market. And if we keep going higher in that 10 and 2, I don't think that's a good thing. So, I mean, the Fed can bring
yeah,
down rates. I mean, the 2-year right now is sitting at 3.63. The 10-year is 0.75. So you said like 0.14 inverted or disinverted. But yeah, the higher this goes coming out of that inverted yield curve, I don't think that's a good sign for anything. Now, it doesn't mean it's immediate, but man, I am like pretty skeptical after like end of year, maybe end of Q1, that this market faces like a pretty tough reality when things really stack up, where it's like, okay, now they can't finally mask it, now they can't talk through it, now they can't jawbone it. It's like the Fed might cut so aggressively that they fudge it up and inflation still is sticky, and the labor market isn't recovering. Dude, is cutting rates going to save the labor market right now? Not necessarily. There's nothing about rate cuts that can save the labor market as far as actual employment, average hourly earnings. It doesn't save the labor market. It might help fend it off. It might help, curb it a little bit or slow it. But for the Fed to say yesterday or on Wednesday that their expectation by the end of the year is that labor unemployment or unemployment rate is going to be 4.4, you're trying to say that over the next October, November, December non-farm payrolls that we're going to have a 1/10 of 1% increase, and that's it. That's a gutsy play if you ask me. So I feel like Steve Carell in The Big Short, when he stands up and he's like, there's a 0% chance that the rate of the risk of that is, that's what I feel like right now. It's like the Fed can't say that with any certainty that the market's going to be barely budging with unemployment. Things are getting that much better just because they decided to cut rates. And the reality is too, cutting rates by 50 basis points is, and they massaged the message on Wednesday, but clearly that cut was to get ahead of whatever they think is coming. Because if it's trying to fend off and curb the softening of the labor market, maybe it helps. But does it fix it? I don't know. That's the tough part. So I keep looking at this, and I said if we're gonna have like a rip higher, I almost want to see this get inverted again. That's what I'd like to see. And so employment data might do that. Maybe it doesn't. But if this keeps going higher and higher and higher, I'm definitely getting more and more cautious. Not saying bearish, but I'm just saying
well,
cautious. So
we cut by 50, which is
yep,
more than what we expected at first. So I think
yep,
short-term rates are going to be highly affected. So I think that's why the 10-year isn't dropping as hard. I mean, they move slower anyways, but I think if we do, like you said, cut aggressively, it might keep that that curve or that chart we're looking at moving higher. It might not go back below zero.
Yeah. Well, so the watch tool as well. So they're looking for a 25 and then a 50. So we're still looking for and this I've seen arguments for just 25, 25. We were wondering, if they're going to cut it all in November because it's right after the election. So right now the market's anticipating a 25 basis points cut with the highest probability in November. That's 2 days after the election, and then in December, highest probability is a 50 basis points cut. So that would be 1.25% cuts from September to December. Like, that is the
I
Fed.
mean, the Fed shouldn't have cut at all, but
You're not wrong. But this is why we talked about this, saying that the Fed cut was actually more of a consumer cut. And a lot of people are arguing that's a political move. It's like, whether it is or not, I think the Fed needed to do something, or else it was going to break. The economy was going to break at some point. Like, you can't have you can't have housing prices this high. You can't have crap this expensive. You can't have people that are stretched with no savings whatsoever, basically financing lifestyles on debt and credit cards. That's not a good thing. Delinquencies are up, um, repos are up. Like, the consumer is definitely getting pinched now. To argue and say, well, household wealth is as high as it's ever been, right? Because house prices have
the
inflated by
houses
50
are,
plus percent.
yeah,
So
the
the only
houses
way
are
you
the
have
wealth.
money is because your home prices have gone up, 50% or more since COVID. I know markets that are up 100 plus percent since people bought a home in 2020. It's 100% on paper. Have they sold it? Have they sold at the highs yet? No. So if somebody bought a house for 500 grand that's appraising for $1 million, are they selling it? No. But on paper, they might take out a line of credit. They might take out 100 grand and say, okay, well, I'll borrow against it, but pay what? Borrow it at 6, 7%? That sucks, man. Like, I mean, you got to
Yeah,
be a pretty good investor if you're going to make that money back and say, well, I make enough money to cover the cost of that line of credit. I'm not interested. So I don't know, man. It's like I said, I'm not trying to sit here and paint this doom and gloom picture, because that's what everybody's wrong. It's like everyone that's trying to be crazy bearish. I'm not that person. Um, I'm just cautious, and I think there's good measure to be cautious, because we've seen the market be
yeah. There's a
sensitive a
lot of
lot since
reasons.
August.
Yeah, there's a lot of reasons to be cautious. I wouldn't
Yep.
say bearish, but
Yep.
like what we've been doing the past couple months is hedging,
Yep. Agree.
and just do
And I'll
that.
keep doing
Prepare
it.
for the worst because it could
Yep.
happen, but I
I'll
feel
keep doing
like
it.
this market is unstoppable.
I mean,
So
I hope it is, because the easiest trade in the world would be for us to be sitting here like cautious, but not necessarily over hedging and taking a bearish direction, and watch the market just blow the top off and be crazy capitulation, and the pain trade remains super high. But we benefit from that. Like, my portfolio is still long. Like, I'm tilted bullish on everything. And like I said, this allows me to have like the broader market. Great. Broader market bulls, I make a lot of money, and that's fine. But I can't afford to watch like good profits turn to, you know, break evens when all of a sudden the market decides to drop 5 or 10% just because it wants to. Like, I think the risk is piling up, where a bigger sell off can catch everybody off guard. And that's what we never know what it's going to be. I mean, look, man, COVID, nobody knew that COVID was going to break the market in 2020. Nobody knew that a deleveraging in 2022 would break the market down 25 to 35%. And whatever the next big sell off at 20 to 30 to 40 to 50% is, nobody's going to know what it is. It's called a black swan for a reason. It's called an outlier for a reason. Nobody knows what it is. But we've seen people for 4+ years since COVID calling the next breakdown, calling the next bear market, calling the next recession, and they've been dead wrong for 4 years. So we truly don't know what it is. But the reality is, if I'm playing to protect my portfolio, I can at least not lose my shirt when the market does, in fact, do something bad. So hopefully that
yeah,
helps. Like, it's necessary to have protection in your portfolio. It sucks to pay for it. It sucks to hedging isn't free typically, but it feels a lot better to have something when the market's down 10% and you're barely budging on your break. Your watermarks are right at the same levels, as opposed to market's down 10%, you're down 10% or worse because you're, highly levered and exposed. So I'm just trying to avoid that. That's this whole conversation. I'm just trying to avoid getting beat up when the market wants to, have a tantrum for a week or two. That's all.
fair enough. Well,
I
I think I've said all I wanted to say today.
Okay. All right. Well,
I think I'm ready
11:30
to
on a
get off.
Friday. Let's I guess we can wrap it up there. Frank, did you have a good week? as we sit here and we
I
don't doom
did.
and gloom and opine doom and gloom too much, but did you have a good week?
Yeah, surprisingly, it was good. I sold the volatility on Wednesday, so
Okay.
that worked out well. And I haven't been doing much since. I've just been doing out of the money credit spreads on the call side. Yesterday was at 7:30, 57:30, I think, and it tested there. I got it for like $1.40, but it went up to like 2.70. I still made the $1.40 at the end of the day, but I was like, if I had waited longer, tested up here, I could have grabbed $240 for credit instead of, or 270 instead of 140. But you
Gotcha.
know, just taking these intraday swings. I
Sure.
have one at what else? Um, I have a $1.10 credit that I took yesterday. Actually, I think it's 710, 705. So
Okay.
not the best price point, not the best entry, but it's looking good now. So hopefully it
Yeah.
expires in profit. But that's all I got for today. Um, Nothing
Okay.
crazy.
Okay. Well, let's wrap it up. Good so far. I mean, I had a great week. I've got a little strategy running right now that's 13 for 14 winners. Pretty happy with that. That's a nice little streak. Let's keep it going. Had some. I mean, I'm at high watermarks for the year, which was nice considering I had some exposure during that August 5th event and survived that and back back up to highs and hopefully looking to finish the year strong. But a little cautious ahead, but for I think good rational reason, but doesn't mean anything. I can be completely pragmatic and rational. This market can do whatever it wants. And I think right now it's probably irrationally higher than it is irrationally lower, which is totally fine. So I'm just trying to make sure I'm not caught off guard by some downward move and let the market melt up all that it wants, because by the end of the year, that could be great. Um, yeah.
Yeah.
So that's pretty much where I'm at right now. And there's plenty more trading ahead. So stay tuned for more. Enjoy your Friday, Frank. Enjoy your Friday and weekend, everybody. And we'll be back next week.
You too.
Cool.
Thank you.
All right. Thanks. See you, everybody.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.